January 3rd, 2026, the United States struck Venezuela at key military and government outposts, captured sitting leader Maduro, and is beginning to push for regime change in the country at the hands of the American military. So while the United States has long-term economic, political, and military objectives in the country, one of the things we're always asking here, Cost, is how does this affect the American manufacturer? And the key part of this is President Trump's stated goal of re-injecting American oil giants into the Venezuelan petroleum economy and allowing the Americans to benefit from both the largest oil deposits on the planet as well as Venezuela's proximity to the United States. So currently it's projected that for Venezuela to recover the capacity in oil production that previously made it one of the richest countries in Latin America, it would take an investment from American oil companies in the tens of billions of dollars. So what does that mean? It means investment in wells that are rusted over, pipelines that no longer function, storage facilities that are poorly maintained, poor infrastructure that has decayed as a result of mismanagement and incompetence at the hands of the Venezuelan state oil company. So for American manufacturers, companies like Chevron, companies like ExxonMobil, we need to go to their existing supply chain, have these massive orders for new wells, pipelines, materials, both created and transported to Venezuela, but then also installed and maintained by Americans. So the bull case here is certainly very positive for those who work in the manufacturing space for energy and oil machinery. So there's reasons to think that this would be a profitable investment for American oil giants. So right now, Venezuela is big on heavy crude oil, which is very different from the American light shale that is typically pulled out of the ground here, for example, in the Permian Basin. And heavy crude oil is used to create things like diesel and asphalt. And this is not something the Americans have in abundance. Currently, about 70% of heavy crude oil is transported into the United States from countries like Canada and Mexico. So this is certainly something that they would appreciate having in a greater number. A couple of headwinds that clearly exist is currently oil is trading about $60 per barrel. So certainly supply has not been necessarily the biggest issue as a whole in the oil industry. And as a second, the current regime that exists in Venezuela as of today is an extension of the Maduro regime, so it certainly comes from the same ideological background. So what we're looking for here at COS is this new administration run by Delcy Rodriguez, who is also actually the oil minister, so has experience with these transnational agreements. Is this going to be more friendly to American interests in the region? Can agreements be made that allow a little bit of sovereignty and safety for investments by oil giants? As well as are the oil giants going to be able to find an agreement with both the American government that their interests will be protected beyond this administration? If this is all to work out, it could certainly be a very profitable time to work in the machinery and manufacturing business in the United States.